Hello everyone, I hope that you are doing well. Welcome to this new lecture. During this lecture I'm going to be sharing with you how I was able to make nearly $50,000 a day trading Nasdaq futures within 30 minutes. Let's dive into today's lecture. Shorting the all-time high on Nasdaq futures. Timing key market reversals. As you can see right here are my executions for today. And what you can see is that I went short right here on Nasdaq and I took profits inside of this lower 5-hour gap. I'm going to be sharing with you during this lecture exactly how I was able to anticipate that we would form a high where we did and how I engaged based upon this. When we dive into the higher time frame analysis, first of all, what we can see is that Nasdaq has been consolidating throughout this week. Notice that the market has been going sideways right here. When we opened up today for Wednesday, what we saw taking place was that the market expanded towards the upside and the market repriced very quickly towards this buy-side liquidity pool right here. The reason why this buy-side liquidity pool is important is not just because it's any random high, no, it's a time-based high. It's the previous week's high. And what you can see is that this very large green candle repriced in close proximity to that high, but notice that it was the next candle which actually took out this high. This green candle right here is the 9 AM RE candle. This large down close candle was the 10 AM RE candle. And at 10 AM, a new 90-minute cycle opens, as I've been teaching you over the course of these past couple of weeks. What you can see is that this cycle opened high, took out the previous candle's high, the previous 90-minute cycle's high, and we reached the previous week's high. Notice that the SMT detector is signaling right here, however, that there's weak SMT. Why? Because ES did not take out the previous week's high whilst Nasdaq did. So that right there is a huge time cycle SMT. I was looking at this whole run higher which took place throughout 9 AM to be manipulation so that 10 o'clock could distribute afterwards. Why? Because it's in these two candles right here that there's a market maker sell model on the lower time frames. Throughout this huge run higher, what does retail think? Retail money traders are looking at that through the perspective of, hey, we should be buying Nasdaq right now. I should be going long. And that's exactly the counterparty that smart money requires to short against. When is the time right for that repricing lower to then occur? That takes place once we see that huge time cycle SMT after we open up high for the new time cycle. When we then pay attention to Intermarket Relationship, what you can clearly see is that on the left you have Nasdaq and on the right you can have ES on the RE chart. Notice that ES did not take out that buy-side liquidity pool of the previous week's high, whilst NQ did. That right there is a huge SMT. When you pay attention to those two RE candles which I had mentioned to you, what you can see is that this large down close candle, the 10 AM RE candle, was higher than the previous candle's high on Nasdaq. But when you pay attention to ES, however, what you can see is that on ES this was not the case. So that right there is another SMT which was present. This was a 90-minute cycle SMT. So what you can see is that there was both a weekly SMT as a 90-minute cycle SMT. And that right there is double SMT. And whenever I see double SMT, that to me is the sign, okay, prepare for a key swing high to form soon. Notice that the market rejected the previous week's high beautifully and we saw a beautiful low resistance liquidity run towards the downside taking place. When we pay attention to my lower time frame execution then, what I would like to see is the following. What I would like to see is that throughout the 9:30 open, the market just expanded towards the upside. The market just kept on running higher. So whenever a retail money trader looks at this delivery, what he or she is thinking is, hey, I should be going long now. I should be buying the market. It's so bullish. They experience massive FOMO, fear of missing out. We're trading at all-time highs. And therefore, they're thinking to themselves, hey, we should go long now. A lot of traders also trade purely based on regular trading hours. And therefore, you need to understand that this whole run higher is all the engineering of sell-side liquidity resting below those lows. Notice that eventually near the end of the second 90-minute cycle from 8:30 to 10 o'clock, we see the market begin to consolidate right here. It goes sideways. This high forms right here. And then we see 10 o'clock open. What does 10 o'clock open do? 10 o'clock opens high after we formed this low right here. That low to me is crucial because it formed inside of this imbalance right here. So the moment that we displace below that low, I already know that that's a bearish breaker. Why? Because we see this high, low, higher, high. But it's not just the fact that we form this low and then set up another run higher. No, it's the element of time which plays a crucial role here. Where did this low form? Inside of this imbalance right here on the left side of the curve. We see the market open high, taking out the previous 90-minute cycle high, taking out that weekly high, and we then see the signs of a smart money reversal taking place. Notice that we take out the 10 o'clock's 1 minute candle high right here, and that right there is where the smart money reversal occurred, and we then see the market displaced towards the downside. Notice how I'm paying attention to this fair value gap right here. I'm not looking at that fair value gap as, oh, I should be buying that fair value gap so that we can continue towards the upside. Now I'm looking at that fair value gap to be a real inversion fair value gap. Why is this an important fair value gap? Because it displays through that previous cycle high. Element of time again. We see the market close below that range right here of that blue shaded box, but notice that we already have a retracement taking place prior to that closure below that fair value gap. That is again a short to me. That's the low risk sell. Why? Because this is our smart money reversal right here. When we see displacement towards the downside and we see a imbalance, in this case a CB right here getting created, this CB, pay close attention to the fact that we form a CB inside of this BC and inside of that level of the previous cycle high. Do you see how everything is aligned right there? The retracement higher occurs, and that's again a shorting opportunity. Notice how the market tapped the previous week's high, rejected it. We see time distortion taking place where the market is simply going sideways around that blue shaded box of that inversion fair value gap. What's happening inside of this time distortion is that price is being held inside of a very narrow range whilst time is sprinting. And the reason why this is occurring is because high frequency trading algorithms are being given the opportunity to fill in their short positions right here. Why are they doing so? Well, the reason why they're doing so is because a lot of buyers have been stepping in and are continuously stepping in inside of this area because they're looking at this movement above the previous week's high to be a breakout. Therefore, what smart money is doing is they're positioning themselves short against that. And that is why I went short at the absolute top right here. Eventually, we see the market expand towards the downside, but notice that it is expanding in a very slow manner. It's expanding, retracing, expanding, retracing, expanding, retracing. The moment that we are however displaced with this candle right here, below this candle's low, notice how the market then kept on referring to that low multiple times. It's going sideways again. So what's occurring here? More shorts are being filled. Eventually the market begins to roll over and we see a beautiful low resistance liquidity run towards the fair value gap which formed at 930 right here. Notice that they took out all of the sales liquidity which was engineered throughout this run towards the upside. And that right there is how you can blend delivery profiles by paying attention to time cycles. Where you see that 9:30 to 10 o'clock ran up higher. So who has been making money all this time? Buyers, of course. So what liquidity has been engineered? Sales liquidity resting below the lows. When 10 to 10:30 then shows the signs of forming a swing high, as it did right here, then it signals to us that from the next 30-minute cycle, 10:30 to 11, we're likely going to distribute towards the downside. Notice that the market repriced towards the downside and SES reached its 9:30 open whilst Nasdaq didn't. That was for me the sign to actually begin taking partials, and the reason being is because if one indices or one index reaches 9:30 open whilst the other one doesn't, that's always a good sign to take a partial. Eventually Nasdaq also rolls over and reaches that fair value gap, and that's where I close the full position. Looking back at this delivery in hindsight, could I have held on a bit longer? Potentially. However, I was content with enough since the higher time frame institutional order flow has been very bullish, and therefore it was simply a trade for the short term, where within 30 minutes I was able to take home about $50,000. What I will now share with you is my live execution video in which you can see me trade this in real time, where you can also see me execute in front of you. I hope that you found this breakdown insightful. One thing before I end the breakdown and before I show the execution video is the following. It's important to note is that if you go into your own charts, which I really suggest you to do, like so many of you probably treat these lectures which I'm producing and releasing as if it's just some type of Netflix show and you're going out here and just binge watching all of my content and then all of a sudden you think you can trade. It doesn't work that way, trust me. You need to go into the charts, you need to investigate for yourself. What I want you to investigate is what happened right here on the highs between Nasdaq and TS. Once you investigate exactly what happened inside of this swing high formation on Nasdaq, you'll be able to see some key algorithmic signatures. And you will see how you can tell that high frequency trading algorithms are firing in their short positions inside of this real inversion value gap on Nasdaq. I'm now going to be sharing my execution video with you, and I hope that you will enjoy it.
I could
I hope that you found my execution video and breakdown of today's morning session insightful. If you did, please let me know in the comments and be sure to subscribe if you would want to see more content like this. If you would like to step up your trading and you would like to learn exactly how I'm able to recognize these key reversals before they occur, from what price levels they're likely going to occur, and more importantly, when, then you can sign up for the Matrix Unlocked and get access to our free training. Good luck in your journey and I look forward to speaking to you soon again. Be safe.